We got a bit of insight into the jobs market this week. We saw the JOLTS report come out, and then also we saw some layoffs from some big tech companies. What are you expecting from this monthly jobs report?
The job market has really proved surprisingly resilient, I would say, in the past few months, in spite of all of the interest rate hikes that we've been seeing. So I think we are really expecting that to continue. If you look at the data from JOLTS, which came out earlier this week, it really showed that in November, which is when we were hearing about a lot of these large layoffs, that data actually was not reflective of the economy as a whole. And it wasn't really even reflective of like larger information sectors or the professional and business services, which is where a lot of these companies really are. And so sort of given that, I think it's important to keep in mind that although we keep hearing still about, layoffs that are coming out, they do still seem to be from this very small sector of the economy relatively. And so I think we do expect that job growth is going to continue. And given that openings are still high and quits were actually up in the month of November and layoffs were down overall, I think we're really expecting to see unemployment to keep holding steady and the labor market to stay just as tight as it's been.
So I just want to be clear. Let's separate the economy from Main Street, Wall Street, and all that. Tech's obviously a huge part of the stock market, but you're saying when it comes to the economy, as far as the job market, it's a small percentage of jobs.
The number of people who actually work there, right, compared to the total number of our labor force. If you think about it in that context, right, it is a small percentage of sort of the overall labor market. So while you're right that it makes up definitely a large part of the attention, a large part of the stock market, it's not necessarily, a huge part of everyday people's jobs.
Totally understand. All right. We've had a lot of people on our air saying that good news is actually bad news as far as the Fed is concerned, because we see good news in these jobs reports and other economic reports, and that keeps the Fed on this path to higher rates to try to tamp down inflation. Is there anything, I'm trying to throw a bone at the people out there that are just praying for a pause or a pivot. Is there anything in this jobs report that the Fed could say, hey, maybe we should pause and pivot?
I mean, I think we saw from the minutes that were just released that the Fed has no intention of pausing. They announced that pretty much throughout 2023, right, they expect to see those rates keep rising. I think, we saw that at least if this jobs report number is somewhere in the 200,000 range again, I think there's a reasonable chance that they won't go higher back to the 0.75 percentage point that we'd seen previously and maybe stay at the 0.5 percentage, which I think would be good for everyone. But at the same time, given how strong the labor market is, the only way for inflation to really come down is for these rates to keep coming up and ticking up a little bit. So I think it's hard to expect anything different from what we've seen from the Fed thus far.
All right, a lot of these job gains have come from the leisure and the hospitality sector. We've talked about that a lot. That sector continues to hire. However, the economy is softening. So do you see another report where we see some softness in that area, or maybe even job losses in that area potentially?
I think it's definitely possible. I think specifically if you look kind of at finance, what we saw from the report that was released earlier this week, they did have actually a loss in openings. They did have an increase in layoffs there. And, we saw some major announcements from that sector. So I think we could definitely see a softening sort of in that area. But it's the other sectors of the economy that are continuing to grow.